Okay, this is being recorded on Sunday night. It is almost 7 p.m. Eastern on Sunday, March 30th, 2025. Give me a second here. And similar to the video I recorded earlier this morning, I'm going to do a review of the entire MeBob week for the week of Monday, March 17th. Going to use the same rules I used earlier, which are, for a long, we will go long at the market if we get a candle that closes at or above the MeBob high. We will go short at the market if we get a candle that closes at or below the MeBob low. And we're going to take profit at a measured move of the MeBob. I'm not going to go back and also do the machine learning take profit rules system. I may do that tomorrow in another video, but I'm just going to go through the 5 days MeBob, looking at taking profit at 1 times the MeBob bar range. Okay, so on Monday the 17th, here's our MeBob. Was it high 17.75, low is 5.25. One thing I want to note here, and a friend of mine asked me about this today, actually made a comment to me, said, if only there were a way to make better decisions on days such as the 17th and the 18th. And I totally get that sentiment. I believe it's a detrimental sentiment at this stage of this thread and our exploration of MeBob. So remember, unlike other threads here at Forex Factory where the original poster says, hey, here's a full-blown system, follow this, follow me, you'll get rich. This was, hey, here's something I found on the internet. It's interesting to me. Let's see what we can make of it by combining it with some basic 5-minute price action setups. So there's that. It wasn't intended to necessarily be an out-of-the-box method. However, I do believe, because it is such a mechanical method, that it is probably the best method available to any trader who's not yet profitable, where the root cause of that inability to be profitable is essentially lack of discipline, an inability to follow rules, inability to stick to your money management, FOMO, over trading, over leveraging, and all of that. We're using this on the S&P 500. If you're a US-based trader, you can trade the full-sized E-mini. One contract, it's $50 a point. I understand that if you're looking at an 8, 10, 15, 20 point stop loss, that $50 per point can be a little rich, uncomfortably rich. But there's also micro contracts available. You can trade micros. They are 1/10 the size, $5 a point. And again, I understand that if there's a 20-point stop loss, even at $5 a point, you're taking a $100 risk plus slippage plus commissions. And for some, that also could be too rich. But there's prop firms out there where for 50 bucks, you'll get yourself a $2,000 drawdown and you can have at it. And the benefit is, if after your 20 trades or during the course of those 20 trades, you may actually pass the prop firm combine and qualify to get a funded account. And the worst thing that can happen to you is you blow your combine or your evaluation, whatever your firm calls it, and you're out 50 bucks and you got to come up with another 50 bucks. When you consider how much tuition costs at colleges and universities to become any kind of professional, teacher, doctor, lawyer, engineer, computer scientist, and then compare what you can potentially make as a successful trader, 50 bucks a couple times a month, even once a week, it's not too high a price to pay. So there are ways that you can do this exercise without having to risk your rent money, your mortgage money, your kid's college fund. And if there's anyone listening to this who's having difficulty figuring out how they can do that, send me a message through Forex Factory, and or actually better yet, if you're too embarrassed to say it publicly, send me a message through Forex Factory. But the preferred thing would be to just go ahead, post it in the thread, and say, hey, I would love to do this, but I'm broke. What can I do to learn this method? And I'm sure between myself and the others, we could find what am I looking for? A free SIM account, potentially, where you could work on this while you work on saving some money to either fund a trading account or save the $50 you need to buy an evaluation account, either from, say, Top Step or from Trade Day. Again, I am not a fan of Apex. Apex likes to deny payouts. They denied me significant payouts. They make rules up as they go along. They change the rules after the fact. They have all their influencers out there on YouTube shilling for them. But if you want a real shot at passing an evaluation, getting a funded account, and actually having money deposited in your banking account, if you're profitable, I can only personally vouch for two. That's Top Step and Trade Day. They both will pay you. Okay, so that being said, this all started out because a friend of mine said, if only there were a way to make better decisions. And of course, what was meant was, if there were only a way we could avoid losses, especially multiple losses. And now, there probably are things that we could do down the road with respect to price action that could minimize or prevent that. But I don't even know if we need to add that. So let's go through here and just see what we have, keeping in mind that our profit target will be a measured move of the MeBob bar, measured from the MeBob bar. So we're not measuring it from the close of the signal bar or the entry. We're measuring it from the actual MeBob bar. Keep that in mind because there is, I believe, a non-discretionary element that emerges from this sort of money management that could be used to sort of disqualify MeBob for that day. And what I will point out initially before I start going into each setup is this. These pivotal levels, especially with the E-mini, I feel are extremely important. And you could forget MeBob and forget Al Brooks and forget your indicators and everything else. And if you just wait for price to trade at one of these pivotal levels and then close on one side or the other, you could create a very profitable trading method just with the pivotal levels. So here we have MeBob. Here's our close. So we would buy at the market at this close. Now let's look at where our profit target would be. So we'd be buying here at 24, looking for a profit at 30 and a quarter. So we're only looking for 5 points or so. Stop loss way down here. So basically looking for a $250 profit, and we're risking, gosh, probably close to $1,000. It was, of course, a loss. Based on our rules, you would have taken this full loss down here. So, yeah, that's that. How would I disqualify a bar like this? Again, I don't want someone new to do this. The real value is to just take the trades, trade small enough so that the losses do not matter. If that means you're trading a sim account, so you're risking nothing, okay. Preferably you're trading either a personal account or a prop account, and maybe you're limiting yourself to 1 micro if the risk is more than 10 points. If the risk is less than 10, maybe you're doing 2 micros. And if you're funded enough that you're comfortable taking the risk with a full mini, take the full risk with a full mini. But one thing to look at here is when your entry is already more than halfway to your take profit. I don't know that I'd say skip the trade, but maybe in that case, instead of hitting a market order to go long, I'd put a limit order back here at the MeBob bar high, 17 3/4. If I get filled, and it goes to stop me out, at least I'm limiting my loss to the range of 1 MeBob bar. And there's probably, I just know there's a lot of frequency where I enter a MeBob trade at the market, and instead of going right to the profit target, price actually comes back into the MeBob range. It doesn't happen every time, but there's that. But this would have been a loss, a full loss, and then the next MeBob entry would have been right here at the market, and the result was another loss. Now, had you done... Now, I usually say, I follow machine learning here, I think it's probably wise. If I get 2 losing MeBob trades, I'm not taking another MeBob trade. If MeBob loses twice, I'm going to wait till the next day for MeBob. Doesn't mean I'm done trading. I might still take price action trades, but I'm not doing any more MeBob entries. But I do have another friend who's doing MeBob with us. He takes all of the MeBobs between whatever this is, 10:15 and 12:05. So he'll take all of these. So he would have had a loss. He would have had this loss. This would have been the one that made him a profit, I believe, right? Oh, I got rid of MeBob. I didn't want to do that. Let me get rid of this. Let me just take the copy of this one. I want to let me move it. There we go. Oh. Okay, there we go. So, did we get one measure moved down? We may not have. Yep, we did. So this would have been 2 losses and the profit. Still would have been a losing day if you took all of the MeBob trades. But this was 2 losses in a row. From a price action perspective, this pivotal level is the previous. That's not last week's low. That was the week's low from the previous week. So this is 2 weeks ago. But this was a breakout level for bears. Price came before we even had the MeBob bar. We have a micro double top at that level. So, and then here we finally get a MeBob signal. And I can tell you, when I was doing a very similar method since November on the NQ. It wasn't MeBob, but it was essentially a fixed bar method. There were certain bars during the day that I would bracket with orders, long above, short below. And one of my rules was I won't buy if I don't have at least 1 R profit between my entry and a pivot. So, and that's, again, that's not discretionary, that's a rule. What's discretionary is you can choose to use that as a rule or choose not to use that as a rule. But once you choose it as a rule, you must use it for at least 20 trades and then evaluate if you want to keep it. What you don't want to do is some days it's a rule and other days it's not, and you apply it inconsistently. You must define your trading plan, define your setups. You will trade much more calmly if there's never a question in your mind as to what you should do. And this week, as you're trading, if you're doing MeBob, and you find yourself looking at your screen and saying, I don't know what to do, then the answer is do nothing, do not take a trade, go to the Forex Factory Price Bob thread and post your question. Try to articulate what it is you are unsure about. And if you can post a screen, a picture, a screen grab, so much the better. Especially because some of you are trading in different parts of the world. There's different time. The time element may be different. Just we want to make sure we're on the same page. We had an instance this week in the thread where someone, I believe, posting from probably Eastern Europe was off a little bit on where he thought the MeBob bar was. And we're only going to discover those sort of mistakes. It's just a mistake, no big freaking deal. But we're not going to discover them if we don't ask and bring them to the thread so we can make sure all of us are doing the same thing. So, committed to just MeBob, this would be a trade and a loss. This would be a trade. And this long would be a trade and a loss. However, trading the way I typically trade when I pre-MeBob, before I decided to do this MeBob test, there's no way I'm buying here. Very possibly I bought on a buy stop here, and I'm probably taking my profit up here. So, for example, this was the highest 5-minute bar close. The highest close was 57.23 and a quarter. I would put a buy stop on the inside bar, buy at 18 even, and this would be my profit target, 23.25. So, the way MeBob set this up, we were buying right into a level that where you probably had an 80 or 90% probability that price was going to turn down. in this instance. Okay. So what? Two losses there. So again, some suggestions. And again, this is not filtering. There's no way you can avoid all losses, as we will soon see. But there are times where you can use written, defined rules that would ward you off of an entry such as this, with the understanding that by not taking this trade on this day, there are going to be days where the exact similar situation occurs, and because of your rule that you won't take a trade if there's not at least, say, 10 points. I was using that. That's what I was using on the NQ. If there weren't 10 points between my entry and a pivotal level, I skipped the trade. I needed at least 10 points because that would allow price to go up and give me time to get a stop loss day to break even, or maybe even at 5 or 10 ticks. I would not buy this typically. So if that's your rule, that's your rule, but there's going to be times where you don't take this long trade because it's too close to the pivot, and that's your rule, and price is going to go rocketing up to this pivot. So you're going to miss out on some winning trades. That's why you need to be consistent. You got to define your terms, define your rules, and stick to them. Okay, now let's go to Tuesday and see if we can't muscle through the rest of the week quickly. So on this day, here you have MeBob sells. So you go short here. You can very easily see when they've gotten close to a measured move profit target, and you would have been stopped out. And then to add insult to injury, you would have been stopped out at 77.5, and you would have gotten long at approximately 79, and within 10 minutes you're stopped out again with another loss. There's nothing that's going to prevent days like this. I'm sure your mother told you there would be days like this, right? Now, you could have someone say, well, here was the low a day, and you were shorting into the low a day, and that's true. And that could be a reason to, that could be a rule. I'm going to keep my stop at the extreme of the MeBob bar. However, if in the course of my trade, price trades to or through the low of day, or to or through the high of day, I'm going to then use a price action stop loss in case price is reversing from that low. That makes perfect sense. Not discretionary so long as it's a rule. And if you don't write your trading plan out, it's not a rule. If you don't write your trading plan out, you do not have a trading plan. So anyone following MeBob, if you're using the original MeBob rules, that's a trading plan. If you decide you're going to only take MeBob entries, if there's at least, say, 5 points between the entry and the next closest pivotal level, that's fine too. But it's got to be written into your plan. If you're going to say, if price trade, I'm going to use MeBob's range as my risk, but if price trades to or through the low of day or high of day, I will then revert to a price action stop loss. So in this case, stop loss is initially at 77.50, price traded to and through the low of day, reversing up. I'm going to reduce my risk to this, to 70 even. That will be a price action stop loss. So again, the reason people think that, first of all, there's a difference between technical analysis and trading by price. Technical analysis, for us retail traders, there's going to be people who disagree with me, but This is the way I think it's best to frame this issue in your mind if you're a small fry retail trader like me. Okay? Now, if you think you're some big swinging, you know what trader, hey man, think whatever you want. You can go feed your ego and stuff it till it's ready to burst. But if you're a guy like me who's just trying to do his best and find a reasonably consistent degree of success in this business, then here's how I would understand the difference between technical analysis and trading by price. Technical analysis is the use of indicators that are the result of mathematical formulae. Okay, so this is a 20-period exponential moving average. There's a formula that determines what that value is at each bar. But it has nothing to do with price. It's the average price of the last 20 bars, but it has nothing to do with what's going on at the moment. Same thing with your detrended oscillator, your Williams percent R, which is a favorite of mine. One of the first indicators I really looked into back in 2022 when I found Rocky's thread at Forex Factory. So that's technical analysis. You're using this external mathematical formula. You're taking data from the price chart across several bars creating this indicator that is apart from price. That's technical analysis. I would even say technical analysis can be trend lines, it can be triangles, it can be head and shoulders. So those patterns people talk about, also technical analysis. Okay, and anything related to technical analysis can often seem like voodoo for several reasons. One, most people don't really define their trading plan well, especially when it's based around indicators. I know people are going to disagree with me, but there's thousands of examples at Forex Factory of people putting out a system using indicators where the inconsistency is immediately apparent within the first couple pages of posts. And then you have people adding more and more and more and more indicators because they're trying to get... They don't see that the inconsistency is the result of inconsistent rules. They think it has something to do with the original plan. And so they try to refine it to the point where they have 27 indicators and they don't even see price anymore. Trading by price, on the other hand, is you're using the actual price data and perhaps time and price. So fixed bar methods, MeBob, opening range breaks, those are fixed bar price action methods. Inside bars. You don't need anything other than the candle in front of you to know whether or not a bar is inside of the previous bar or not. Breakout mode, when you have consecutive inside bars, or you have an inside followed by an outside followed by another inside bar, IOI. You don't need any mathematical formula to tell you what's going on. A wedge. What's a wedge? The market makes 3 attempts to go in a direction and fails. That's a wedge. Okay? You don't need an indicator to show you that. And that's different from some of these other patterns. Now, can you define a bull flag and a bear flag based on price? Absolutely. Here's how Al Brooks does it. A bull flag or bear flag is any correction against a prevailing breakout where there are 2 legs up, each with an attempt to resume the direction of the breakout. Okay. I'm not going to show you that right here. I'm just saying you can define, if you can define those patterns, you're trading by price. If those patterns are subjective and only you can see them, and the only way someone else can see them is if they buy your $499 pattern recognition course, that's BS. It's not a real pattern. It's subjective. But if you can define it using language, so that I could communicate it to someone who never traded before, but then immediately, within minutes, no more than maybe an hour to a study, they could start recognizing that pattern. That's trading by price. So again, on this day, MeBob rules, you had a short loss, you had a long loss. If you trade all of them, you did have a profitable trade. You would have gotten short here, stop loss up here, 1 hour profit target for sure. Right there. So again, there's nothing though you can really do here. To me, there was more than enough room between that previous low and the entry point for me to take that trade. If there's 5 points on the ES between me, my entry, and the next pivotal level, I'm taking it because I'm fine taking a 5 point profit target. And, the 1R would have been just a little bit above that level. So I would have said, hey, if it hits this level, I'm going to break even on my stop, that type of thing. But it didn't even get there. It was, there's sometimes you're just going to lose 2 in a row. It's the way it goes. So the difference between these 2 days, again, if you had a rule where, you need at least 5 points between a pivotal level and your entry, you would not have taken this one, and you would you have taken this one? Close 18. That was... So you probably would have taken this one. In fact, this was a good trade. I mean, it turned out to be a lower high. You really have a big channel here. It's a bear channel, wide bear channel. You see it's making lower lows, lower highs, lower low, lower high, lower low, lower high, lower low. Right here was a double top bear flag, but it turned out to be a higher low major trend reversal. Major for the day. Doesn't mean, obviously, doesn't mean that all of a sudden you can take your 401k and buy nothing but SPY. Okay, so there's that, and then this, hey, nothing you can do. Okay, let's blow through here. So here would have been your short. And that would have made it. Again, what I've been doing is if we get a profitable trade, I've been stopping. This would have been a long. I don't know if that made it without coming back. Oh, it did. So you could have had two winning trades here because this was still MeBob in the morning. Again, I won't take a MeBob entry after this candle closes. If this is not a signal at this time. So if this is a signal, in other words, if this bar here was here, I would buy. But if this is not a signal bar, I'm done with MeBob. Doesn't mean that I'm done trading, but I'm done with MeBob. This was the FOMC day. I remember we had this, and then we had this rally at the end. Okay, let's get rid of this risk reward. Let's go to Thursday. MeBob close here. That would have been a profitable trade, and again, I know Machine Learn said he feels this would be a new entry, traded into the MeBob and closed above. The way I'm doing this myself, I have a rule. I do not reset. I won't take a second MeBob trade in the same direction unless my 5-minute bar first closes inside the MeBob range. So for me, I wouldn't have gone long here But if I were trading the whole MeBob in the morning, I would have gone long here. That did not make it to that profit target, however. And at this point in the day, I'd be looking at this as a double bottom bull flag, and I would have probably gone long on a buy stop above here. But if you're doing MeBob, one win, probably one loss if you took this one. I wouldn't take this as an entry. I would insist, if you've already had one long trade, don't take a second long MeBob trade unless a 5-minute bar has closed inside. If you take this trade up here, it's got to be for a non-MeBob reason, okay? Maybe you buy the close because you have a little micro double bottom here, bull flag H1, you're anticipating an H2. It wasn't an H2. By Al Brooks's method, this is your bull flag. This is actually a good place to show you this. So you have this rally, and here you have a pullback here. This is your H1. This is the first bar that made a higher high than the previous bar. And you get another leg down. This is your H2 entry. You'd have a buy stop above this bar. Now, you'd also have a buy stop above this bar. I typically look for buy stops above bull bars. So when this didn't get filled, I would usually cancel my buy order. But when this one closed green, I'd get a buy stop above the high. Over here, this could have been a place to buy on an H1, but this was a bear bar. Same thing happened over here, bear bar, price broke above the high. I would have waited for there to be a bull bar, and at this point I don't want to buy that close to a pivot. Pretty weak, no follow through here. You almost knew they were going to pull back at some point. No way of knowing how far, but you know. So that's MeBob for that day, and then here, MeBob here. So again, so this would have made your profit target. Stop loss down here. But again, here is where you got to be careful with your rules. If you had a rule that I'm going to take a MeBob long, but if it trades to or through the high a day, I'll use a price action stop. This would have been a small loss rather than a win. So the way I'm looking at this, I'm going to be back to trading this week. Again, I didn't really give it a full effort last week. I can't even remember if I traded every day. I certainly didn't trade with the focus and trade the setups I would always trade. Like I was sort of, zoning out. I was missing things. I think I'm back. I think I'm going to be okay to really focus tomorrow. And I'm just going to follow the straight MeBob rules. I'm going to take the MeBob entries with the MeBob stops, and I'm going to take my profit at a measured move of the MeBob bar as measured from the MeBob bar, not my entry. And the only rule I would add is if I am at or very near, so say less than 5 points from a pivotal level, so from a previous day's low, previous week's low, current day's open, that type of thing, previous day's settlement, I'm not going to buy into potential resistance, and I'm not going to sell short into potential support. So there are going to be MeBob bars that I will disqualify for that day. But that's my rule. You can all use that rule, You can reject that rule. What I urge everyone to do is make sure you write down your rules, including defining the MeBob bar. And if you're real new, just use the original MeBob rules and the 1 hour profit target. Because what you have to understand right now, the goal is not to be profitable. I mean, of course, we want the goal to be to make money. But right now, the goal is to train yourself to perform the behaviors that will make you a consistently profitable trader. And that behavior is trading a mechanical, rule-based, non-discretionary trading method and doing it for 20 days, getting in 10, 15, 20, 25 trades. And at the end of that 20 days, you're probably going to be profitable. And if you're not, you're probably not going to have lost very much at all. But you'll have gained a valuable skill. Okay? So much longer than I wanted it to be. My apologies to machine learning. And I hope that if you did suffer through this entire 41 and a half minutes, that you found something worthwhile. Have a great day. I'll see you guys tomorrow.